Joining us right now to talk about the virtually risk-free investment is John Lim. John's a physician and a writer, frequently blogging at humbledollar.com. And John, you took a really complicated, unknown topic of the I-bonds and you explained it beautifully in your blog. I will tell you, before I even read your blog a couple of months ago, Warren Buffett said that this was a great investment. I didn't pay much attention to it until I read your blog and saw exactly what to do. The day I read your blog last week, I opened up an account and bought $10,000 of these bonds because that's the most that you can buy. It's really important because it's a great technique for savers, the same people who have kind of gotten hosed by the Federal Reserve keeping rates low for so long. Tell us what I-bonds are.
Oh, well, thank you, Becky, for having me. Yeah, I-bonds are one of the two savings bonds that are issued by the U.S. government. I-bonds basically are a risk-free investment, or virtually risk-free, because they're backed by the full faith and credit of the U.S. government, of course. And right now, they're offering an interest rate of 7.12%. And if you think about it, an interest rate of 7% that is risk-free is really unattainable anywhere else. That interest rate is composed of two components. There's a fixed rate, which is currently 0% and has been for about 1 year. But the more interesting component is the inflation rate, and that is indexed to CPI. And that has been, as all your viewers know, has been rising quite a lot this year. Most recently, I think in October, it was about 6%. So the interest rate resets every 6 months in May and November. So that interest rate of 7% will be good for the next 6 months, and then it will reset in May of next year.
We just heard from Steve Leisman that the Fed is anticipating the inflation is going to be around for well into next year. So that means that when the reset comes, you're probably going to still get a pretty healthy return. I mean, does the I in the I-bonds stand for inflation?
It does. Yeah. Yes, it does. I stands for inflation. So, yeah, I-bonds are really wonderful investments. And as you mentioned, a lot of people really haven't heard about them. That's been my experience as well. But they're risk-free because essentially you don't have interest rate risk, because unlike, say, a TIPS bond, even if interest rates rise, you can't actually, the value of your I-bonds doesn't go down. It can actually never go negative. And you also don't have inflation risk because you're protected against inflation because it's indexed to inflation.